Hello everyone, Mutual Fund Basics tutorial here in the Philippines using COL Financial. We are gonna use one of the well-known brokers, which is COL Financial, COL, or Citizen Online Financial. So if you are an OFW, working professional, one of the best ways to consider right now are mutual funds because it has potential, a promise to grow your finance to reach the goals that you want. So by the way, I'm Brian Villarosa. I have a website, brianvillarosa.com, and you are going to see there some tips on how to grow your finances and secure your income. I am a licensed financial advisor of Sun Life. So MF, or mutual fund for beginners. I used my Alcancia before, and so what we're gonna depend on would be the COL Financials resource, which is found in your account. If you have a COL Financial account ready, just go to your website, and there's a tab there called Mutual Funds, and once you click there, you will be led to this window, and then just click Get Started, and I'm going to share to you this section, the mutual fund basics. So I'm going to share 5 sections only regarding the basics of mutual funds. So what are mutual funds? They are professionally managed investment products. So I'm just going to explain to you first the word professionally, which means that you are confident that somehow these people are doing their job full time to identify growth factors for you and for your family. All right, so I just figured out how to use the drawing tool. So professional, when you say professional, people are these people have the training, the certifications, and they manage your funds. And it's called an investment product. When you say investment, there is always a risk involved. There is no such thing as a risk-free investment. So you have to be open-minded to see that there is such thing as losses in investments, but it should be calculated losses, an educated loss, or educated risk. Then it's called, they pull together the assets of various investors, which is cash. So that's why it's called mutual funds, because inisa kayo, all together you have become one, you are pulled together, and you are placed in one instrument, which is called a mutual fund instrument. Okay, so the pooled funds are invested in different asset classes such as money market funds, fixed income securities, and equities, etc. So just a little bit of explanation for this. Money market instruments and fixed income securities are a little bit of conservative types of instruments, because fixed income, meaning the money is being lent to someone and the returns are already calculated and expected, but there's also still a risk involved. Equities are those put into businesses. So if you can remember in the accounting, assets is called liabilities plus equities. So equities have a higher possibility, a chance, a promise of yields, but also has a higher risk of falling down. So you just have to make educated investment per se. So there are different types of mutual funds that match the investor's financial goals and risk profile. This is very important. As you go through the years of investing in mutual funds or in stocks, you have to know what are your financial goals. Do you need the money right away, within a month, within 3 months, within 6 months? What is your risk profile? Are you afraid to see the red that your money is going down? Is that money something that you need in the next 5 years? So if these answers you don't know yet, better to know these answers or your financial and risk profile. If you don't know yet, just go to my website, brianvillarosa.com. Under the mutual funds or VUL, you can see there a questionnaire which might help you identify such your goals and risk profile. I was using the Sun Life Financial as a financial advisor. I can help you with that. One of the best features of mutual funds is that even with just 5,000 minimum investment, you have access to professionally managed, diversified portfolios of equities. So, malalaman po natin ito in a while. So, next is, what are the types of mutual funds? Okay, they are categorized of underlying financial instruments depending on the different investment horizons. So when you say horizons, your timeline, when will you need that money? So here is a simple chart that might help you. So type of mutual fund, here is a money market funds and bond funds. I would say that these two are a little bit similar. Short term, meaning you would need the money in not less than a year or 1 to 3 years. So this is ideal for those who want just to preserve their capital. If you are about to retire and you don't need the money yet within 3 years, you just put it here so that there's a possibility of growth. You can just grow it even just a little bit of it, a little percentage, because these yields are usually little percentage yet. So this is ideal also for very big amounts. I don't recommend if you invest just below 50,000. Wag niyo pong lagay yung 50,000 below here because again, sorry to say, but frankly speaking, ma-frustrate lang kayo sa growth niyan because you don't expect too much growth because these are conservative. When you say conservative, again, not too big losses, not too big gains, but still, you just want your money to have that little exposure to growth. All right? So balanced funds naman, medium to long term, 3 to 5 years. This is ideal for those if you want to grow just a little bit your money for down payment of the house, a car, etc. And of course, this is for the younger ones, the equity funds and equity index fund. Also for those who are into risk, if you are already in retirement, but still you have this budget or fund that you want to play with or you want to grow and to put it in investment, you can put it in equity funds. This is also ideal for those who are in long-term planning. If you're thinking about your retirement, if you are still in 20s or 30s, it's better to think of it. And if you are getting a VUL, for example, in Sun Life Financial, I offer VUL. You put it in your life insurance, but at the same time, you put some of it to equity funds so that in your retirement years, there's a growth for your funds. All right. Or also, this is also good for those who have children who are still in their elementary days or in their toddler days. You're already planning for the future. You put it in equity funds or index funds. Where this is being placed, this is being placed in the stock market, especially the blue chip ones, blue chip companies. Now, how do I invest in MFs? So it is called buying shares by the funds. It's called NAVPS, Net Asset Value Per Share. Just to make it short, each NAVPS is the equivalent of what you're buying at a certain period of time. For example, you have 5,000 pesos right now on a minimum investment, ibibili niya yan ng NAVPS ng isang mutual fund. Alright? So how is it computed? So total value of fund assets minus total liabilities divided by number of shares outstanding. So ito po ay total value ng lahat kayo na naglagay yan minus yung mga babayaran, yung mga fund managers, yung mga officer staff, divided by kung ilan lahat ang mga shares. Alright? So value divided by shares, ito yung tinatawag net asset value per share, NAVPS. So ito pong basihan. Kunwari, when I bought a NAVPS, certain NAVPS of a mutual fund now at 1 peso, and the next 10 years, that NAVPS is already equivalent to 30 pesos. So if I invested 10,000 pesos in the next 10 years, how much? So 10,000, naging 30, so naging 30,000. Alright, tama ba? Or 300,000. I guess 300,000. Alright? So how is the number of purchase shares computed? So ito, purchase shares equals to investment amount divided NAVPS. So again, if I have 5,000 pesos and the NAVPS is 1 peso, so 5,000 divided by 1 peso, I have 5,000 NAVPS, 5,000 shares. If it's 10 pesos, I have 500 shares. All right. How much is the minimum investment? We will discuss it in the next video. So if you have questions, feel free to comment, subscribe, or email me at my website. Just go to brianvillarosa.com/contact. Thank you very much. John 3:16, Matthew 6:3. This is Brian Villarosa signing off. Thank you and God bless.